Boy Wonder, I swear it's like this every single time. Toronto, I got you. I got us. Yeah, on double MG, I fuck a rapper's wife. Have her splitting thighs like she work at Gladys Knight. I was never nothing nice. She ain't even my type, but I made the sacrifice. Yeah, niggas know the real secrets left in Hidden Hill. Middleman lined it, then I cut him out the deal. Bought the whole street up and I got it for a steal. Ayy, turn cutthroat for real. And God forbid I die, man, you boys ain't on the wheel. I was on a ride while you boys are sitting still. I've been on a high while you boys are on the pills. Cold world, baby girl, but I ain't from the Ville. Cold world, baby girl, but I ain't from the Ville. Yeah. Niggas try to copy sound, but they never had to feel. And that's the reason going independent, it just never had appeal. She and me are just like Kobe and Shaquille, but we never even chill. I bought her an apartment, so I knew her like a tenant. All the verses tailor-made for you to get offended. It was never unintended. Backyard Tiger Woods worthy for the...
What's going on, guys? Today's article is brought to you by Daily FX. Hawkish tilt in Fed minutes, while trade data in Asia weakened gold, US dollar to the Singapore dollar and the US dollar. It was another day in Wall Street as statements from the FOMC minutes did not reflect the level of unity among policymakers to pause rates as what was initially expected. Particularly the key takeaway that most participants continued to see significant upside risks to inflation. You know what that means, guys? For us, it means that the more inflation there is, the more they're going to have to cut, the more they're going to have to raise interest rates because they haven't met their target. Their target is 2%, and we're currently sitting at around 3%. So I do expect another 2 rate hikes in November and December, which could require further tightening of monetary policy. Exactly what I just said was somewhat perceived to carry a hawkish tilt. So guys, the word hawkish means raising rates because it comes from the bird. Like a hawk is a bird that flies higher than most birds, and then a dove, it's those white birds that are usually released in funerals, and they don't fly that high. So the point is, doves are down and hawks fly high. The Fed funds futures still showed firm expectations of a rate pause in September, 88% probability, but doubts have surfaced for the November meeting. A 35% probability of a November hike is currently priced up from a 28% a week ago. Given that the Fed reiterated its data-dependent stance in the minutes, it may still have to take a series of upside surprises in inflation to anchor down views of additional tightening. But for now, the minutes were tapped on as a catalyst for the risk rally to further unwind. Alongside jitters in the Chinese space, U.S. Treasury yields largely held firm, with 2-year yields hovering at the 5% mark as a reflection for a high for longer rate outlook, while the 10-year yields head for its October 22nd peak. The US dollar firmed, crossing its 200-day moving average for the first time since November 2022. That kept the pressure on gold prices overnight, minus 0.5%, which touches a new low since March this year. Its weekly RSI has headed further below the 50% level, with further downside potentially leaving the 1,850 level on watch next. I think, guys, if you sell sell gold now, it's probably at around 1,890 something. Yeah, but it's in those levels of 890. If you sell it there and put your stop loss at 1900, ride it all the way to 1850. Asian stocks look set for a negative open, with the Nikkei down 0.88% and the Australian index down 0.90, and the Kospi from Japan down minus 1.21% at the time of writing. Weak showing in data across the region continue to point to the prevailing headwinds in global demand, partly weighed by the low for longer growth conditions in China. Japan's exports registered its first year-on-year decline in 2.5 years, and along with a lower than expected rate in machinery orders for June, -5.8 versus -5.5 consensus that may support the Bank of Japan on its more gradual path of policy normalization. Similarly, Singapore's non-oil domestic exports for July tumbled with a larger 20.2% contraction year-on-year, way underperforming the 14.4% contraction expected, given the headwinds to China's growth conditions, with property sector risks likely to drag for longer, while spillover default risks has reached the shadow banking sector. There are rising doubts on the country's 5% growth target for this year. The current bias is that the worst is yet to come for China, with more subdued growth outlook across the export-dependent region likely to stay for the rest of the year. A firmer dollar overnight has pushed the USD Singapore dollar to a new year-to-date high. The daily RSI is in overbought territory, may call for some cooling, but given that the pair has reclaimed its 200-day moving average for the first time since November 2022, buyers still remain in great control. The pair is heading past its $1.360 level of resistance this morning, where a 38.2 Fibonacci retracement level stands from its September 2022 peak to February 2023 bottom. Further upside may potentially pave the way to retest the 1.376 level next. The 4.2% gain in the US dollar over the past month has seen the index the 4.2% gain in the US dollar over the past month has seen the index overcome several key resistance in the likes of a downward trend line in place since September 2022, along with its 200-day moving average. Sustaining above the moving average line will be key ahead. For now, the US dollar is back at its 103.12 level. Oh, the hell did I just do now? 103.12 level may potentially pave the way to retest 105 is the next level at its weekly RSI, as its weekly RSI attempts to head above the 50 key level as a reflection of buyers and great control.